morning and the evening to you all, wherever you are joining me at this hour. I said, welcome to 98th edition of Investdata Trading Academy Live with Ambrose. I will tell you that the market this morning is not smiling across the globe. I will say that the economic data that are emanating and also the fear of recession has continued to dampen some traders and investors decision and also their move. This also weighing on most of the market across the globe. As we speak now, I will say that the stock markets across the globe are looking down. I mean, what they are edging down as we speak now, as trading has opened, has opened in a different climate, as losses hit this market at this hour. On US inflation reports signal a higher rate hike, and also weighing down on global outlook and growth. As June consumer price index being being the hottest rate since 1981 to hit 40 years high of 9.1% inflation or consumer price index for the month of June from 8.6% in May, just as the EU also is a hiking rate today for the first time in 11 years. All these monetary tightened by different central banks of the world to check or to checkmate inflation as geopolitical issues, seeing a crisis in Ukraine, and also the oscillating oil price, all combined has continued to impact the global economy and domestic economies of different climate negatively. On that note, these certain parts of this climate are trying to raise the inflation rate. But one thing we should have that in mind that with all this rate hike, we are seeing that inflation has keep on rising, and this is also a sign also to tell us that as we speak, it is not the kind of result that the central banks of the world are expecting they are seeing at this hour. And ask me why. Because we see what is happening. I show you that what is happening is not liquidity push what inflation. This is cost push inflation, and for that, as they are trying to increase the rate, see inflation is still, that means it's beyond most of these central banks. I think that this is the time that they should take also apart from hiking rate, because most of them that are hiking rate will also indirectly kind of increasing cost of fund and also cost of living with rate hike, at the same time deflecting growth even when we're expecting to kind of control inflation. That means I think this is the time now they'll start be thinking which of the policies should be coming now. Do they go the side of a physical authority to inject more fund, or how do they want to? Because as we speak now, that is why I can see what is happening in a UK, United Kingdom. They already know because of cost of living, they're actually disposing money towards to the citizen to be able to meet up their cost of living. For me, it tells you that the rate hike alone is also increasing cost of living. That's why I think it's time for the certain banks of the world, even at the domestic one, to sit down and balance what they want to achieve. Yes, you can see that if you look at what happened about last week, on Friday, I saw the agro report that prices of the commodity are started to also dropping gradually as a result of what increase the farming activities in different climates where there's no war, especially in US and others. That also, but it's yet to reflect on price of goods in the market. But I believe going to forward, and also the kind of negotiation between Ukraine and Russia, as the war leaders are going, and to mean that most of the commodity that are the port, Russia will allow this to be shipped out for the global consumption. That if that all comes to be, we'll soon start seeing a kind of drop in terms of prices, because what is happening now is just inflation because of distortion in supply of commodity, especially the war that's going on. Commodity or prices are also oscillating. Look at what is happening in the crude oil market. It tells you that this is what I believe that the central banks is looking at. If you go beyond rate hiking, because the more you hike rate, the more you are tightening up activities of your private sector anywhere in the climate. Because once interest rate is high, I'll tell you where you are using a 50,000 or let's say $50 and you're not spending about $100. Yes, and the cost of price, and even the people that to buy, the purchasing power of the people are still also already shaking. You see that at the long run, people won't be able to take those products in the shelf, and that also lead to bad performance of this company at the end of the day. But in all this, investors should see that and see which sector or which industry you should be looking at to stay ahead of what is happening. Because I said it anytime, any day, that in any uncertainties, there's always opportunity. But you as a design investor or trader should take time and see where can I take advantage of what is happening, to create wealth for myself. I say as we speak now, I've said that US, Europe and Asia stocks are down at this moment, as some sectors and industries are still not providing trading and investing opportunity for designing investors or for designing players that understand how to combine fundamental and technical analysis. Because I speak now, this is the market. I would say, if you are not a professional or if you are just guessing the market, you won't get it. That's why those that just take advantage of the discount window. That if you don't have the technical analysis, better technical analysis toolbox that tell you how to use some indicators and also some technical tools to know how to manage risk, and also using your your stop loss and all those stuff, your support level and resistance level, using other indicators to know exactly when to be in a stock or not. Because as to speak now, despite the kind of back home here, we saw it pull back. There's some stuff that are going to make spike in this, but ability for you to know, using the analysis to know when there's a stock is about to turn, or where it's about either to turn up or to turn down. It is your technical tools will help you, and also your indicators, if you understand how to use them. That is why, for those that really want to stay out of this market, you must know how to combine fundamental and technical analysis effectively, especially as the earning season is around the corner. We're expecting that no the half year earnings no result will start hitting the market any moment from now. But you know that when they hit the market, it's going to influence the market globally. But as we speak now, I can see that JP Morgan just posted a profit that also declined from all the expectation, because of all this. It tells you that as we expect more results to come globally, it's going to shape the market again. But there are some sectors that also benefit from these changes we are seeing. You as a trader, it is not done on you to know exactly where you should also take advantage of the market, and where you should enter before others start to identifying those opportunities in that space, where you, especially those sectors, that no matter what is happening, they are about to do what positive number from them. That is where you should be now as to speak. Fear of recession has continued to influence oil price in the international market. As we speak now, Brent crude is also trading as at a low of 97.64 after pulling below the $100 in previous days. But as we speak now, despite the projection and the forecast of many analysts and big banks and international banks saying that yes, despite the pullback, that oil is trying to hit 200 and above before the end of the year. You can see this is why I said most of us in trading that don't allow yourself to be trapped in any boot trap. Because of what you see it early, you need to confirm. That's why you must know how to combine the technical and fundamental to know exactly what to do. As you are seeing also, like what we believe in Investdata, that once you see a company that is growing its earnings, you are seeing price is rising, you are seeing volume is also increasing, and you are seeing positive sentiment, that is where you should be. Don't forget that in the market, you are not there to know the name of the company or who is the manager. You are there to want to make profit. That is why you must look at where is the sentiment going. Where is the we're seeing as investor psychology moving to that sector, to that industry, to that company. These are how to invest as we speak now. That's why as an investor, you should know exactly what to combine all the technical analysis and also your fundamental to know exactly what to do. Across all the tradable assets as we speak now, traders should use what we call technical tools to manage risk and also apply stop loss in all trade position or all trade move at this point. Because I've been hammering on this, that this is the time for you to take away emotion, take decision where you need to cut your loss, where you need to also sell down, depending on your conversation on the kind of instrument you are trading. But in all you are doing, take away emotion in your decision. Once you see something that tell you that what attracted into this particular stock or into a particular company or sector are not there again, that is integrating, it's time for you to start running. But if those things are still very intact, and you are seeing for that even when the market is correcting, market is entering on a decline phase in terms of local market here, others have been in that phase for a long time, that if that that they will be the one that also will lead the rally when there's an upside turn of the market. For me, I believe that it's not a time for anybody to panic in the market, but rather to make what wise investment decision and also use data and also chart to know exactly what is happening in the market. Once we're able to achieve that, we are good to go. But that is way to go now. As we speak now, we want to look at how to trade using the price action. I've been doing this for a long time, but today we want to consider the importance of Fibonacci exponential moving average. This is different from your normal moving average. Your short moving average 7 days abroad. When it comes to exponential moving average, there's a class of average that it is more for me that give you for medium and long term and short term. For those that short term trader, you need to apply what we call the 8 days exponential. That is EMA 8. Then for medium, you can look at 21. While for long term, you look at 55. 55 days or weeks or period for you to look at for long-term position. This is how to use this exponential. Like I told you earlier that this exponential moving average reduce the lag seen in what in a simple moving average. That is the difference between the two average, exponential and what and the ordinary moving average. Applying more weight to what to the recent prices that were seen. Especially if I look at the index now, you can see that index is trending, trying to consolidate for a while after it pulled back and then bounced back to the level of around almost 52 before I trended. As we speak now, despite the pullback we saw yesterday, even this morning, we can see that because of the adjustment in the price of boa food, we can see that it also put the market back down. But we expect that before the market close, because as we speak, market is still the bread is still positive. But I'm not there. But I want to tell you how to use this the Fibonacci exponential moving average is very, very important. And when you hear me calling the T line, this is where we got the T line emanated. That is the 8 days already used for T line. For short term, for you to know where to buy and where to sell. It's very important that you know all this. Once you know all this, it helps you to know exactly when to take position and when not to do. Weighing and the weighting applied to the most recent price depend on what on the number of period in the moving average. We apply 8, 21, and 50 and 55 weeks period for your entering signal and also for your exit. This will also guide you to know exactly where you should sell off and put position and put cash and when you should bounce back. That's why I said as a professional, you don't trade every time once you see opportunity in the market. And like I said in this program that there are some people that after we release our trading with the any season video, I know about 4 clients that they don't trade on the market, they only trade any season because they understand how to use the video also to know when to be in the market for any season and when to also when your expectation is not met, when the result, you know exactly how to cut loss by also selling off ready to move for another stock. This are what you but if you have your technical tools, it will help you to know exactly when to hold cash and when to jump into position. That when we come to the index, we will see what I'm just saying. But just try to prepare your mind that using an exponential moving average is what will help you because it's different from the moving average. Especially moving average differ from the simple moving average in that it gives you a day a day's EMA calculation depending on on the calculation for all the days prior to that day. You need far more than 10 days of data to calculate a reasonable accurate 10 days what 10 days EMA. That is why for us that use 8 days, you can see that because we want to cut the move short fast, and that is why we apply 8 days so that help you use it as a trader. Now that we're using a day chart for our life class, it makes sense that we're using the 8 days T line our moon average so to even cut in and out, even when it comes to we are using other time frame. But this 8 days will help quickly to cut the turning point of the assets you are trading where it has gone below because price action is very, very important. But with the T line, you know where to be above the T line, where the bull is still strong, when the sentiment is still positive and strong, when it's also weak, because it will help you to look at the two sides. There are 3 steps to calculating an exponential moving average. Yes, because the indicator we are using or the software we are using are calculated, you don't need to calculate it, but know how to apply it. That is the most important thing. But if you want to do some, understand it, yes, there are 3 ways also to step to calculating this. The first one is that calculate the simple moving average for the initial value. Then the exponential moving average must start from somewhere so that the simple moving average is used as what as a period in the in the in the the first calculation. Second calculation that the weighted multiplier or weighting the multiplier will also guide you. Third, calculate the exponential moving average for each day between the initial EMA value and the today at the end of the day or today's price as we speak. Using the price the multiplier and the previous previous day EMA value to know exactly where you should take position. These are things that will guide you when you are buying or selling your your stocks, because even when you are watching the trend, whether you are trading ETF, you are trading what, this will go a long way what in helping you. The the chart you are using will be a very clear one. Like today, I will call up the T line again so that you can see. But I want to give you more explanation because if you really want to know when a new trend is starting, the T line will give you prompt, and also other indicators like the CCR, which is the commodity channel index, will also help you to know when a new trend is coming. It depends how you apply them, because when you apply them, it's very very important. As mentioned earlier, the entry signal are based on what, on the use of what, your 8 days, 21, and the 54 days weekly moving average. The 8 and 21 are about financial numbers. Like I always say that you know that Fibonacci numbers are what, as in special sequence of numbers that I prefer to help us manage the space and the time. And this is what I mentioned earlier as I'm discussing. This for those that I really want to do. As I mentioned earlier, you are try to zero between 8 days, that is for short term. Then for 21, 0 to 8 days, for short term. While 21 days, is for what, for medium term, and 50 days is for long term. As I mentioned that, this will help you to catch what your in and out position for the market. Though before go to the market, if you look at this indicator now, you can see as to speak now that the market is trending just a little pullback here. But as we speak, the state of the market at this hour is the market is doing 51,331.59. I mean, the market is also down as we speak now, by 58.66 point, represented by 0.10%. The market is down. The Ocean Index is trading below the T line, which you know yesterday we saw it as we speak now. It's supposed to coming down. This is that confirmed that the market is what, on a decline phase now. I told you earlier that we have four phases of the market: the accumulation, the markup, the distribution, and the decline. Market has gone up from the distribution phase now because the pullback, that is a decline phase, the market is starting. But see, market is trading above the 50 days moving average. That is why I said on the long run, market is still strong, and that is why market is still strong. That this is what will attract institutional investors. Those that they are waiting to analyze all this economic data and the company earnings that we're expecting for the take position. I said earlier that institutional investors, they don't take position as to take. They need to analyze, look at the pros and cons, then expect approval from the investment committee and all before they take action. But I believe that they are looking at, as we are looking forward to see the inflation figure for the month of June. We have seen already what has happened in US, that inflation has spread into 9.2. That alone also send panic along the globe, and that has a way of influencing other countries' inflation figure. I believe that for our own here, we are still expect to see inflation hitting around the 18.5 or even above. If that happens, you can see what's going to send another kind of where fund will flowing, that where what the institutional investor will be doing now in the midst of all this. How they protect the investors' money they are managing, which sector will give the return. Yes, we know that the fixed income market have a deep space for them to put trillions and all those stuff. But in equity market, we can also hedge against inflation to make value forward or to make good returns for our clients. Which lets these are things that we've been want to see the inflation figure for the month of June, because that will usher us to the second half of the year to see how they can take advantage of the third quarter and also the fourth quarter, where we expect a lot of activities at the end of towards the end of the year. These are the things we're speaking about. So I've said they were having the market is on a positive bread. We're having 11 gainers as of this hour, and we're having also 9 losers. That is that market is on the positive side. Among the top gainers, we have a computer hardware group leading the gainer start as yesterday. That means I sustained for 2 days. We have seen livestock feed coming up here, and then that means it reversed the trend yesterday, which I told you that the hour chart looks and see the pattern, can see academic press sustain the uptrend. Then I see NACO featuring here after recording that. Even also we are seeing the Boa food that was adjusted this morning, trying to regain now on the also the gainer, the top five gainers. The others are see the life of international building. You can see Zenith Bank, GT Code, and Sterling Bank among the gainers. But on the loser side, I tell you that the loser side will have 9 stocks on that chart at this hour. Top by FTN Coco, followed by FBNH, then UPDC, we have Jais Bank, and we're seeing a Unity Bank there also. But we can't leave here after talking about the volume. Volume traded, the top trading volume, we have the Transcorp leading, followed by International Brewery, Academic Press, ACO, and the Women Bank. These are the top trade in terms of volume as we speak. But we want to look at this market on this chart. We have discussed about the our what we call a T line, which is a 8 days exponential. I want to call it up here before I want to draw your attention. I want to do something together in this class today. I want to look at the market, where the market is and what we expect. This is the earning season period. Any moment from next week, we start seeing a company releasing their number. What will investors be doing when this number start hitting the market? We want to know exactly what we should do. Then this is the money flow. Then bring out our MACD here. Yes, MACD. Then also bring out our 8 days like here, short one. Just turn it to 8. Yes, this one. Yes, you can see here as we speak now. As I did there yesterday, I want to show you that the market is still at a decline phase now. You can see that we saw it pull back. You can see it here as confirmed. Market has been kind of consolidated all this while from here to here. You can see night has finally pulled down, and that says that market has pulled back. And this pullback also creates opportunities for those that are long-term investors and also medium-term that also an opportunity in those sectors we are going to discuss as we go along here in this class today. This is the a day chart, but we want to look at the market on a longer time frame. Let's take a let's take a month. If you look at this month here, you can see this is as high as around the 2007. You can see the market here when market got to the peak of almost 65,000 here before coming down, and this 2007 to 2008 around March for market. But if you look at it, you can see that the T line are going to guide you. When the market was rallying, you can see that the T line was still telling you that the index action was above the T line, was a strong one, but immediately it started correcting. You can see where it comes below it, confirm, and this for a month time frame. You can see what happened all these ones. You can see this for a long see. But if you come back here and see that the market are broken this level, you can see it are broken at this level, another level. That means market has for the past 2 months, for the past 2 months now, there is the month of June and July so far. Market has tried on a correction mode. After market has remained above the T line all the way from here, you can see all these ones market remain above the line. This correction, as we speak now, it has not even broken down the T line on what on a monthly time frame. Then that the market is still strong on a long on a long term. You can see that the market is still very, very strong. Looking at this, what the T line is telling you now. But what you know that market has broken this top, they have broken this top again, and until market come down and break the T line. That is where on the monthly chart, that is where you say yes, there is still no panic in the market. As speak now, you can see your MACD is also still positive on the monthly chart. These are the things I want to show you so that you won't panic, but rather you take advantage of the information we are going to share here and also subsequent discussion to know exactly what to be, especially as any season is around now. I believe that for design investors and traders, we are taking position already, expecting the earnings to come, and also, in fact, if the company meets expectation and market react, as we speak, there's still liquidity in the market. That's why it's not much, but money is looking for where to go. That's why you need to join side patient. Once they start seeing positive number, that's why I say market at this point is waiting to see this direction that will come from the numbers. What will be the state of the earnings of companies? But surprising that you can see that as happening that you can see the JP Morgan posting a decline, even if for the result they just released recently, just today. But that will send you what kind of result you see globally. But as we speak, there are some sectors that will benefit to what is happening. As they continue to hike rate, which sector going to benefit from rate hike? It will be the banking sector, or even as they want to play more on the fixed income space. And if the rate remain high, as I speak now, you can see that the rate for TB is also coming up. And in any of their open market operation or open market TB offer they are doing auction, you can see it up. It tells you that this is space that the bank will play most. This will also tell you where you should be at this point, especially as you're expecting the Q2 number. I said it earlier in this class again that we expect the Q2 number to impact more on the what the rate adjustment to apply on the bank, but as from third quarter and end of the year, this will also tell you the cycle where you should be at this hour. But for me, the market is not doing badly, but we're seeing correction. That is where on the short term, on a small short we will see that market is still not doing too badly because of correction. But on the long run, nothing to fear for. Let's look at a week chart now. On a week chart now, look at the weekly chart now. We want to confirm if the market also, as we speak, the market trading below the T line, you need to confirm. You can see that on the weekly the market is below the T line. You can see it here, all this one, two below. Until market breakout, we will confirm. You can see the situation now. That is why it's good to always look at this to know exactly what to do. For you, if you have exited here, you are waiting for for a breakout. But if you look at here, you saw this kind of formation that here this hammer that tell you that next week market gain, but market has been given up now for the previous week. This is a new week we have, but just the second trading day. This is the shortest trading week because of the holiday. But you can see that the market is still down. But for me, there's no cause for alarm. But since on the long run, the market is still bullish, but we expect that the earnings that coming can also reshape the market going into the future. Let's quickly come to our day chart. Yeah, this is the day chart. We have seen that market is below the T line, and MACD, as we speak now, is here to confirm an uptrend. You can see that the histogram here have told us the market is still on the side trend. But if you look at money flow, you can see that money flow is looking down, down from almost 41. We saw it yesterday, now around 35 or 36. We expect that the pullback and also the adjustment of food because of the weight is part of what I put. But now that it's also looking up, we expect that it's also changed the direction of the market. As I said, the market breadth is positive, but let's keep our finger crossed to see where the market will go from here. Because of our time, let's quickly look at a few ones we can take a look at. Let's look at for beginners. Let's look at what is happening. Livestock just rebound. We need to look at what is happening livestock. This academic press, I said if you take profit, let's see how far it has gone. You need because all these penny stock don't waste too much time to take profit, because the way the market is now, once you make 10, 15, 20%, you are good to go and come back. That is how to trade. Because if you want to only trade, you trade with few stock and go in and out. I feel like those that are giving you sign, that's why I say this is the time for you to master your technical analysis. Before the market was like trending, it was constrained for both for the market players, because when markets are trending, there's nothing is coming in and out. But now you are seeing it enter a decline phase. Before we expect it to rebound, now it is better for those that see this a pullback as opportunity to buy into good position, knowing that the pullback will not remain. Once we start seeing some fundamental news of financial news, all this is going to also change the trend depending on the state of the companies of the earnings we are looking forward to see in the market. Quick one, I want to look at livestock. Look at what is happening in livestock. What is happening in livestock as we speak. It's among the gainers now. Livestock. Look at what's happening in livestock. Very, very important to know what is happening in that space. Livestock. What's happening in livestock is very important. Like I said yesterday, this morning you can see it on the day chart. You can see that it's turning green already, but still trading below the C line. We have seen that MACD is bullish. You can see it here. But money flow is looking down. There's a missed trend there, a missed technicals here. MACD is looking up bullish, while money flow is looking down. This for the day chart. We'll quickly look at what is happening on the hour chart on the stocks, because I see on our chart the stock is trading above the T line here. For me, it's a good one. And money flow is looking up, and MACD is about to confirm. Fine, this is a good one for for those that are in livestock that took advantage of the pullback yesterday. I think I take your position. So we're seeing positive sentiment already behind the stock. That is good for livestock. Want to look at the academic press again and see what is happening there. Before we go to the life of see what happened in food. Want to see, because it's very, very important. After marking down today, we're seeing a rebound, and this is a company that is new on the exchange. Want to see what is happening in academic press. It's a new company on the exchange, and we're seeing doing well in terms of price action after 10 naira markdown. That also bounce back. It's a good one. If you look at the 1 hour chart for academic press, you can see that it's far below the T line, almost reversed the trend on 1 hour, an hour ago. You can see here positive one here now. For me, it's a good one. We're seeing a green volume, but not up to what we did yesterday. But let's see how it goes. MACD is positive on our chart for academic press. Yes, money flow. Sorry, on a day chart, we're seeing a kind of correction here, little correction here, but profit taking is already showing. But let's wait and see. But for those that are there, like I said, don't be greedy. Once the time for you to take profit, so that you enter around the 111, almost doing a 2 naira to 1 kobo. That is almost 80 to 100%. Nothing stop you for taking profit now. Don't be greedy. That this same market that give you profit can take away profit from you. The market that give you, that market can equally take it. That is why you should know how to take profit when we are profit. But we're still, because of the markdown date is still far, I think our qualification date is the ability to take profit now. I know that the 144, the corporate action, has supported this rally, but don't be greedy. It's right for you to take. Also, don't forget that once also the uh, bonus is factored into the numbers of the company, that will also slow down their payment and also their earnings. You have to be very careful so that you won't be carried away with the momentum we are seeing. Quick one, as I just said, let's look at what is happening in Boafu. Then the banks, were waiting to see, they are waiting to see their Boafu, waiting to see their, half year results. Most of them they try that paid the dividend. Boafu, you can see this morning on a day chart, you can see what it's doing. Money flow is looking down, but MACD can see the today correction price is around 49 from almost because of the suppression of you can see it here now. But let me quickly look at 1 hour chart for this stock. It was adjusted today for the dividends of 3 naira. On the 1 hour chart, you can see that it's trying to rebound, and that's why it's among. And we're seeing money flow trying to slide, not looking up, not looking down, because on the flat move. And also MACD is still bearish on the 1 hour chart. Let's see, we go into the future how it's going to perform. That is how to go about this stock. Then quickly one, you can still look at what is happening in FBN8 and UPDC. For UPDC, I said this pullback for me is an opportunity for those that missed not up. This is time for you to go ahead of the number of the company. Let's look at what's happening in FBNH. Very, very important. Let's see what is happening in FBNH. FBNH on the 1 hour chart, yes, I can tell that the stock is struggling. You can see how trading on the 1 hour chart, the trading below the T line. All this while it has not even crossed, but even today on the red, still trading below the T line or slightly on the T line. But the money flow on the hour chart is still looking up, and MACD is still what is still bearish. Also cross the red one up down here. Let's this for 1 hour. Let's purely look at the a day chart for what is happening today in the stock in terms of to speak now. Stock is below the T line for the past how many days now? For almost, you can see when crossed down, you can see where it crossed up, traded here. Then now it's like 11, between 1140, 1170 has become this was the former Western level. Click another one here before pulling back. Then when coming back, it must be this one before we can say another new trend or strong rally has come. But once it crosses the T line, above T line, that's where you can jump in. Keep your gaze on this stock. But for those that are thinking about, for those traders, I think you would have. But this is not a stock that been traded. But don't trade dividend stock where you're looking at in the financial sector. But for long-term investors, yes, you might wait for another pullback if you're buying, or look to see confirmation for traders. But for those that are long-term investors, you can buy below it. But for me, I would say that for this stock, I have to trade with caution at this time. Yes, MACD is also confirming like a bearish situation. You can see the histogram here is coming down, and that also there that the trend can see that the trend, the price action, and the momentum indicators are moving up. I expect from money flow that is looking up on this side for LPN. But let's look at UPDC. UPDC. UPDC is a stock to look at because of what you're expecting that stock. UPDC on a day chart, still above the T line, trading flat there. Okay, let's see. Our money flow is still around almost 82, but still flat now. And MACD is positive on the stock. All this on a day chart, but let's quickly look at 1 hour chart before we run the class a day. On the 1 hour chart, it's trading below the T line. You have to watch, and money flow is coming down, and MACD is bearish. For me, there's no cause for alarm. Watch this preparation here to see where to go from next week after the earnings that started, and also when the company release their number. We expect the number to hit the market towards the last trading week of this month. That is around 29, 30, 31st of July. But I believe that if we maintain the trend of the first Q1, the Q1 we have seen so far this year, if that tempo is sustained, we'll see that reversal in price of this stock before the end of the year. A strong reversal that investors should keep their gaze on this stock going into the future. Because to speak now, as inflation figure continue to rally, most of the hedging will be some real estate product and services where people can hedge against inflation, and this is where this company is playing. We believe that also the shareholding structure of the company will also be in support of the price movement going to the future. Yes, I will say big thank you for staying tuned to this hour. I will say thank you and look forward to see you tomorrow. As I always say, don't forget to share the link whenever you know you get it. Give to your friends, your neighbors, and your family members. Oh, and also subscribe to what or YouTube. That YouTube, I'll tell you, you get a lot of things. Even the what we discuss on the Q&A throughout the holiday, you can see people taking advantage to get more information on how to take decision for the new week that started yesterday. That is what you should do. Know exactly what to do by getting on board. Subscribe so that anything that is posted on that you get alerted, and also you take advantage of information shared to also enrich yourself by taking an informed information decision that will also impact your bottom line at the end of the day. That is why I will encourage you at any time. Also feel free to ask questions. Even our discussion in last class is very robust. Even the analyst hangout also that will be coming up tomorrow will also be on that blog. That's why you need to subscribe. All this is being updated. You get a lot of any information being shared on that platform. Thank you.